What's going on, everybody? Time for YouTube recap. It was an interesting day today. A little bit choppy, a little heavy. Always prior of FOMC or any kind of big late Powell release, Jackson Hole, anything coming up. Generally, we get some very static, choppy, poppy, droppy moves, and we just don't go too heavy on the trade days. We take them nice and light and clean and clear. And usually do a lot of watching and just a little bit of scalping. So for the post on X today, did a little bit of a post for you guys here, just in pre-market. Said we got a bunch of exponential targets up here, 19,756 area. Was it for me? It was a recovery of 19,800, and I called 45 points to the long side for you guys. So called it here, and all the way up here was my target long for the pre-market scalp. So congrats on your free 50 points that we handed out here on NQ on the free Twitter, on the free X rather, whatever it happens to be. So let's get into a majority of the day. So the biggest takeaway of the day was the magnet on SPY that had to the gap. Now, again, I would prefer the gap fill not hit, but we still had our NQ gap, which we had called many moons ago, 19,900 gap on the futures that needed to be filled back on July 27th. Now, we had the daily gap here on SPY, which was its last gap down. So this white level right here, 562.10 cents, as we have it charted off, is the last daily gap. Okay, and gaps are the most and strongest thing in technical analysis world for us. So here is it tagging that daily gap. And notice we had a couple of those little fresh low snap downs here. This one included on the 5-minute chart, creating these very large candles directly into the ends of the closes here too. So, geez, TOS. You can see that they have a big tail or big body, right? And these guys generally are the sneaky candles we're talking about here of FOMC or coming into Powell, and we're going to get that a little bit later today. And that's not going to be the end of it. We have really big downside potential still leading into FOMC and down just for a minor correction to backtest to buy more into all-time highs. But this is the correction point right now. After this gap is filled, we do have a potential to drop back down. And that should be in the macro of your vision, right? So the vision of the market right now should still be coming down to fill some of the gaps we had put to the upside now on SPY. This chart gets a little messy here, so we'll go right here. We have one gap right here on the daily, which is the near-term large right over the 50. So we have no back test of a clean, clear 50 SMA. So we'll talk about the confirmation there. And we have a small gap right here. So as we came into this last gap fill today, we can look for something to wash back down to that 10 SMA 50, bounce, potentially come back down to that 100 bounce area. That one's not going to be as likely. That's going to be option B. But option A here, any of these dips are going to be buys for me, okay? And any kind of just structured long that will happen after this V reversal, we're going to conk out hopefully before highs, maybe even hit highs, come back down. And these dips are the ones you're going to be buying into the all-time highs and further into 2025. I'm pretty adamant on. So let's talk about the day trades. What was our target? Well, I wanted to see the 666 5-minute short today. We actually got the gap fill first, obviously on SPY, and we just got our target 5-minute 666 right here. So the 666 5-minute SMA was something that was chasing us for a long time on the upside. If you notice here in the purple dash line, I think it's like day 7 in a row here that we had no contact with our purple dash line. Now, that's okay. In certain days where we hit a very large catalyst like SPY's gap fill and then hit a knee-jerk reaction, that would be the day you look. We didn't even look for it yesterday. That would have been nice, but was not in the tune. Now, I was hoping for short into a first gap tag and then down a support and then go up. So I wanted to see the lower high set today myself, and then I wanted to see it go down. So this is why I was on the sidelines a lot, and I only took 2 trades today because just the price action prediction just didn't go my way, so I didn't trade it. It's very simple. So when we don't see the MACD and we don't see the RSI, we don't see anything working towards our goals or having a nice convergence, we generally don't play it. So now let's talk about a little bit the old VIX, because this was a very interesting gap open, and this is what kind of saved us from the big detrimental red. Okay, and you hear us talk about VIX and gaps all the time, but that big detrimental red right there, let's talk about why that could still happen, right? So that huge big red, and of course the long side, notice the VIX open here on the 5-minute chart. This closes down at 8:15 Central here in pre-market, doesn't open again until a little bit after 8:30. And if you notice, we have a gap right here on that opening time frame. It did create a secondary gap on the 5-minute chart and pushed higher and higher. So with the VIX pushing out of the gate and the market, for some odd reason, holding and pushing, At the same time, I noticed that these gaps are tagged here, and until the VIX came down to tag those in long, I was not going to go short on the market. So what does that mean? Well, it means if the VIX goes up, we have a potential for the market to come down. If the VIX drops hard, we have a potential to do the opposite, right? So we're going to go long. This gap needed to get filled, right? Which we hit this one, and obviously this one is still open. And then it kind of took off running, right? So that opening range push, the double gap in question for the VIX, caused us to push on the VIX. Now let's take a quick peek again at the market. Notice how we had those pushing out of the gate from the SPY as well with the VIX, right? But then this pretty nasty candle happened right here, right? And then we had the VIX coming down to the gaps and then shooting off. And that happened at about 9:45:10. We got off right here on that market. That's what caused the huge volatile candle. So the VIX gaps were predicting, saying, hey, man, we can't jump in to that short side here until the VIX goes down and fills those gaps, right? Or at least attempts to. So the VIX fell right here on the higher high push, right around 1660, all the way down to that 1590s area. During that fail, right, coming into that 10 a.m. push, that 10 a.m. push, notice right here, huge red drop, right? So when the VIX came down to those gaps, then pressured, that caused this big mamma jamma here. VIX turned right back around and kept pushing, because again, we are coming into FOMC, which should be bearish, into that deviation 2. Now, with this, the VIX is overextended into the deviation +2 and needs a relax. So at this time, we are looking at 11:15. We're looking at that hot RSI. We're looking at the push on VIX being hot, and it needs to chill out. Well, obviously, 11:15 was the target short, right? So the 5-minute 666, as we just talked about before, was in question for the short target. And lo and behold, right as the VIX was topping out into a hard pressure +2 deviation where the VIX needs to drop back down, aka market goes long, that happened exactly at the 5-minute 666, netting you another fantastic move up. So those are a couple metrics that we had used for our trade. Now, coming into the good old trading view, right? Hold on to a single pane here. Now, with TradingView, we had a couple anchors that were kind of interesting as well here today. And I'll show you a couple of the first ones that we had played for the long and the short. So I played the short side here with the VIX. Again, that was the only one big trade that I got. Everything else is pretty small, barely in the 600s on the PAs or whatever they call them at the Junker Top Step. And the big account was still fine. So this higher low was one of the biggest directional sets for Qs and for SPY. SPY had a much cleaner setup here, but the low a day hit, and for that higher low was something that we had watched kind of come back up to. So let's talk about the first anchor. This is an anchor VWAP strategy where we came into the opening candle of the day, we put a low down, and then we look for rolling support. We don't touch anything until it comes back down into that anchor VWAP. So what I mean by that is we hit an anchor here, right? And the price action is right here. So we have no idea what's going on, but the price action is running away from that anchor. And then we look to go long once the price action comes back down, confirming support into an anchor VWAP. So we got that right here and right here, perfect double bottom. And lo and behold, this indicator lines up perfectly with our massive over under that we had today. This is the same one that we had on yesterday. This neon green level right here was a big over under precursor for us this morning. So I said over or under this, that is the outlook and direction you will take, right? So as we've seen this double bottom come in, and this is right where that anchor came in. So here is catalyst number 1, the anchor, right? Catalyst number 2, perfect double bottom, and price level tag back test support. Now these candles were a little speedy today, and that's why I said we did a lot of watching and calculating today. We did not do a whole bunch of trading today, even though ending up green just didn't take a whole lot of trades. But notice when the price action ran away, now on TradingView, we put that anchor here and it was doing this, right? This is the anchor. Okay, so that anchor waited for the price action to push, finally slapped down, right? Came into price level. This was major over under right here in the green. And then, of course, we had anchor helping us out as well. And then it shot back up for another one. Now, of course, the VIX was the one that, as we had already gone over, VIX was the cause for the big slam down here. And of course, if you forgot, which we already ran over here too, the gap fill. So the biggest technical analysis marker that we had for our SPY today was the, oh, it wasn't on the default there. Well, it must be in our lesson tab. There it goes. So the gap fill. So again, with the VIX's perfection and the SPY's gap fill right here, that caused a algo reaction knee jerk, coming down into our short target of the 5 minute 666, right? And of course, if you look at Qs, we also got the Qs, 5 minute 666. And of course, that was our short target. Our short targets become long entries, right? So initially we called half candle retrace in yesterday's close, which is right here, 480.31 for that short. We had a little bit of that blip up. She wanted that gap fill on SPY so bad, and she hit that and then came down to target 1, and then came down to target 2 at the 666. So a little bit of abrupt moving there, but regardless, we stayed clear, we stayed tried and true, we stayed to the real minimum trades. And if we cannot identify a trade, we take a step back. And that is the best trade in the market, is the one where you don't have any risks, is the one you don't take and you get that free tuition and that free learning, right? And just for honorable mention, as we do use the VWAP, and I use this on the 1 minute probably more than anything, and I have one little chart specified for this, but I use the +2 and -2 deviation, which a lot of people do, on the VWAP right here. That's our standard in the purple. Notice here on those markers when we started getting really close to that -2, right? This was the 666 5 minute chart tag right here, along with a -2. So what we do here is we end up stacking these catalysts. Hey, the 1 minute chart says we are at the -2 VWAP. Hey, the 5 minute chart says we're at the 666 5 minute SMA. So and so forth. The RSI is cooked here, really cold on the 1 minute, as far as on the Qs, right? So we are stacking these catalysts, saying a lot of indicators at this price level, according to different time frames, are all telling us the same thing of a very big pivot level, right? Long or short, doesn't matter what it is. Same thing here on the top. We had a +2 push into the VWAP, even stayed above it for a while on that hardcore squeeze, ended up hitting a price level, huge weekly 484.18, and then got dominated back down to our over under level. Now we creeped under that level, hit support. Now we're kind of creeping just on that level. I assume we're just going to chop until FOMC announcement. So I think we're going to take an afternoon break here, and we're not going to make any predictions, obviously, like we did in the last couple of videos, and those last videos hit pretty well, but no prediction on FOMC and news. My over prediction here, as far as where we continue to go, has already fruited. So if you watched our private video or prior videos, and of course, if you trade with us private, you'll already know these ones. But our weekly right here, this was our Fibonacci point of interest. This was our long-term swing box, came down 1618, 2618, hit the 200 moving averages, again, stacking those catalysts together, higher load the RSI on the daily. MACD is always lagging a little bit behind RSI, comes into the 200 and then starts that force up. Well, where are we going to come back to? Well, our fib boxes always tell us the tail. We don't have any data on the top of this golden pocket, right? So once the golden pocket is tested right here, which has been tested already, this is the end of the road right here, that 3820. So I think 490.70 is about the highest you'll see this thing, even if it like does a crazy push today, which very unlikely, or into Friday, we should get a technical pullback, like we said earlier in the video, to back test some of these gaps that we have open on the daily to again buy into further all-time highs. And that has been the precursor into 2025. I have zero interest in downside for the big part until 18 months plus from now, 15 months plus from now. So a lot of markers are lagging in the basket of technicals. So nothing to worry about there. Now, last but not least, before I head out of here, I just want to touch on NQ. Alrighty. And before I left my team here, I said once we broke down this pattern, we're going to come back down to that green target and then get a little bit lower. So we did end up flushing here. Then during this flush, we put out a green target for friends right here, and it only had a little bit of change left on it at the over under, but it still hit you another like 18 to 20 points. Once a short target is hit, boom, it becomes that long entry very beautifully, right? And a big takeaway from this right here, because this is specifically, it changes from Qs to NQ. We trade off the Qs a lot of the time. But again, the NQ here helping us out with that 5 minute right here is that purple dash line. See it? 666 again. And what am I talking about? I'm talking about a shy. And we talk about that a lot on the channel, where we come into a technical analysis shy where price action comes slamming down and then almost hits the 666. We call that a shy, right? And when we see those shies, we know that the price action is going to scan back up, right? Trap the opposing side. So if you are a short player that is going for the 666 5 minute, you are going to get smoked chasing a big red candle like that. The long trap right here comes up and then bam, slams back down to that 666 5 minute. So as a confirmational trader, what we do here is we wait for these markers to almost hit shy like that, pop back up, find the lower high, because that's going to be your confirmation of high day. This is your lower high. And then we're going to obviously move back into target, lower low, retrace a little bit. Now waiting for FOMC. So we did have a couple of really good technicals here just for the intraday. I did not get a chance to play these. We're a little bit slow today, and just some days are your off days. That's plain and simple. And if you are strong enough to sit on top of the market and not do anything, that is one of your biggest strengths. Trust me, the no trade, no risk is the biggest. And I'll just show you guys that gap again. As I was saying way back in the day here, what it feels like a million years ago back in July, when we get a gap like this one here, oh, Drawn Tool's going crazy. We have a gap and go that's not a contract change. This is an extremely large gap that was left open here from July 27th. An NQ pointed to that downside. So it is a gap and go into the down direction. And we actually called both of these because there was two of these freaking things. They were amazing. My other chart has the other one. I think it's right here. Yep, here's the other one right here. So just developing a trade strategy off gaps, because futures gaps are very rare. I'm not going to get too much into my systems and tell you guys exactly how these work, but very rare nonetheless. So I'm going to clear this set right here. No, I'm not. I'm going to leave most of these on so you can see the gaps. I'm just going to clear these fibbies, get them out of your way. So these gaps right here, we'll draw them just rough draft so you can see the channels of where these gaps were created, because this is extremely important. There we go. So when these two gaps were created and then launched themselves down again, you can see where the 200 moving averages come in. These are the daily EMA and SMA 200s. They're just coded into any chart I bring up that is under the daily chart. So right now we're on the 30-minute, the 30-30. The 200s still show up on our chart. So with that being said, the gaps right here and right here caused a perfect trend change, perfect gap and go. And when we came back up, gap filled this one, we came down, and what did we make? We made a higher low in price action, and we started holding the 200 moving averages, and then we started flying up. And this was back here 2 weeks ago, right after that 200, right after we got over that gap. I said we are going for this gap right here. This gap will fill before any big downside metric. And I know it was kind of a bold call, but we said it on YouTube. And then from here all the way back up to gap fill, 1,598 points. So these gaps are not to be ignored. I promise you, gaps left open once confirmed trend change has been developed. Low, higher low, giant support off the 200s, first tag of the year, recovering a 200 moving average 30-30. And we're going to come down here, right? We're still going to come down. Let's do a little extra mini lesson here. Look at the moving averages, okay? The moving averages alone right here are telling you that we need to come back down and back test these. And hopefully it's the start of the FOMC, and hopefully it's after the gap that we have just filled today on SPY, because right here on the 200 SMA, notice the price action. It's the peach dashed line, okay? That's our 200 SMA. It's right here. Price action right here crossed over, consolidated, and ran away from that 200. 666. Right here, Tuesday, right? Last Tuesday, slammed over, consolidated, caught the 100 EMA, ran. So that means the 200 SMA and the 666 both require backtest confirmation. So we are going to use those as short target magnets, right? Magneting the price action on the 30-30 on the way back down once we see the snap. So the best case scenario, I'll give you a freebie here, under the 50 SMA daily, trending with confirmation, which is lower highs, lower lows, stacking up and pushing, we will find the 666 backtest when the short confirms. Trend change direction confirms, okay? Like we have here. Not random, not just short right now and hope for the best. Trend change confirmation, lower high, lower low, sequence change, all right? If you find any content value in what we provide here in the channel, you want to trade with us live, you want to do this with us live, watch us narrate and trade this thing day in, day out. We do it every single morning, plus pre-market and Discord. Links are in the description. We also have Apex and Top Step codes if you want to support the channel a different way. If not, no big deal. We'll see you on the next video.